Bert Dohmen, the man who called the 1987 crash, the dot-com bust, and the 2008 meltdown, told the world silver would play violent catch-up to gold, and it has delivered one of the greatest moves in commodity history. Bert is also sounding, however, the loudest alarm in 49 years. He says the systemic risk in today's markets is worse than 1929. Margin debt at all-time highs, fake economic data, an AI bubble ready to pop, and a bear market he warns will be brutal and unforgiving. As we close out 2025, how much further can silver run? And when does the big one hit? Bert Dohmen of the Wellington Letter is back with us today. Bert, so good to see you again.
Good to see you. It's always great to be with you. Yeah, well, thank you for a nice introduction, but I don't want people to think that I have a crystal ball that tells me the future.
Well, no, but you obviously were onto something. You were onto something with silver, and like I said, I had to double check those prices. Silver hitting record highs in 2025. Your thoughts on this historic peak?
We go by advanced technical analysis. So we look at charts that give us not only price, but we look at volume also. That's really important, the volume. And this is what I would say 90% of all the analysts that you hear in the media, they never talk about volume. They don't look at volume, but it's really important. If the price rise is supported by a higher volume. If it isn't, then you have to start watching out. You also have to look at support and resistance levels. Charts tell you all that. So right now, we're getting to the point on silver and gold, short term, where we're reaching resistance levels on the miners, for example. And when everybody wants to get in, it's time to be cautious. And I always tell people, you cannot really short-term time the gold and the silver market. For the short term, we've never found anything in the roofing business for 50 years that can do that. So you have to go and extend your time horizon, and especially the high-frequency traders, the algo traders, that can put in 90,000 trades in a second. Trades, not shares, trades in a second. They can manipulate the markets over the very short term. They don't care about the long term. They care what they can do the next few hours, the next couple of days. That's their time horizon. So right now, with everybody getting very bullish because of the price performance here the last few months, it's definitely the best sector for the year, and which I like long term because nobody really has talked about it for a long time. Everybody's been so fascinated with AI stocks, and
Yes.
the AI stocks, they're getting to the point where they're getting really risky, and so I look at what is the real money. Real money is not Bitcoin. They call it it's a big misnomer. A Bitcoin, they always say, this is what? Digital gold? Digital gold. Imagine that. You give them real money, $100,000, or now I guess it's in the 80s, and you get a number for that. Then you take that number to your supermarket, and you want to buy a loaf of bread with $100,000, and they won't give you with $100,000 because they don't know what to do with that digital number. So this is what people forget. All this crypto stuff has no intrinsic value. So now with the crash we've seen, where Bitcoin is down 36%, all the people who thought it would be at least keeping pace with gold and silver, they found out they were very wrong, because gold and silver have soared while all the crypto crap, it went into the tank.
We'll jump right back to the interview, but this is too important to skip. The real risk today isn't just a market crash or recession, it's the US dollar being reset, revalued, and losing all purchasing power. Prices keep rising, incomes can't keep up, and central banks around the world are buying record levels of gold because they see what's coming. You can't fix the system, but you can step out of the line of fire and position yourself the same way they do, like a central bank, not a common investor. That's why we built the Private Wealth Playbook. It's free and it shows you exactly how to protect your wealth, privacy, and retirement through whatever comes next. So click below or go to DannyReport.com and secure what's rightfully yours. That's an important point. But getting back to silver, and you brought up manipulation and whatnot, and of course, there was chatter online about how there was a CME outage at the same time that silver was making these highs, and they say it's because of this outage. I was speaking to one gentleman who said that silver's true price, was finally revealed. Now, since then, CME has said that all futures trading activity, including gold and silver markets, has resumed ahead of the trading session. All is well. But do you think there's any coincidence or anything to read into here between the CME outage and silver's record price here?
There's no coincidence. These things they happen intentionally. So, I mean, I've been trading this stuff since about 1975, when gold was legalized. That you, as an American, you could finally hold gold, and so there's so much manipulation. It's the big bullion banks, the J.P. Morgan, etc. They're traders. They've been charged and convicted of manipulating these markets, all markets, and they've been multi-billion-dollar fines. But that's cheap. That's pocket change, because they've made tens or hundreds of billions of dollars with their manipulations. So you always have to consider where so much money can be made so fast that it's not going to be unmanipulated. So if you're going to take gold and silver, you have to look at the long term, which means you cannot be leveraged. I've warned in every issue of our Wellington letter, do not be leveraged, because the leverage kills you. You can have the best investment in the world. And right now I see, for example, ETFs. ETFs, when they first came out, they were like mutual funds that traded like stocks. So you could buy and sell them anytime during the day. And then finally they came out with a leverage, 2-to-1 leverage ETFs. Okay, so now you could get leverage. And then suddenly 3-to-1. So lately, the latest thing is 5-to-1 leveraged ETFs. That means if the stocks held by that ETF go down 20%, which is basically what a bear market is, and the ETF is worth 0. Okay, you have lost all your money. People don't consider that. They say, "Oh no, I would get out before that." Well, only you cannot get out, because it's just like the stocks. We've seen the very popular stocks. They open the morning, the trading, on huge down gaps of 20, 25, 30%. And the human nature does not allow people to sell at that time, because they say, "Oh, I've got a loss now. I can't sell because I have a loss." No, when you have a loss, that's the time to sell. That's the best sell signal you can get. When you have a loss, get out. Small losses are much better than big losses.
So, Bert, just, what do you think is behind this catch-up rally that you forecast for silver? I mean, we know that when it runs, it's more explosive, it's more volatile than gold. But what do you think are the catalysts, the fundamentals here driving the action?
Well, first of all, gold has gotten very expensive. For the average person, you're not going to buy a gold bar. So silver now is the poor man's gold, as we used to say, and it really has a lot to catch up on, because gold was going up over the last several years. Silver is really doing very little, and so this is a catch-up move, and there's a lot of catching up to do. Silver also has an industrial use. Silver is used in there's this mania about server stocks, the AI revolution, so on. Silver is used a lot for that, as is copper.
Yeah, I was thinking the devil's metal, as they call it. Bert, so long term, let's say the next 6 months, where do you see gold and silver headed? What are your charts telling you?
Next 6 months, I don't do forecasts on the precious metals for that. We may forecast short term, but not on other sectors. But gold and silver for 6 months, forget it. You should not be concerned about 6 months. You should, if you buy the stuff, you should put it away. Okay, and forget about it. You'll have it. This is, this saved my family. I was born in
Yes.
Germany, so during the war, it was good. We had the Reichsmark. That was a functioning currency. But then when the war was over, nobody wanted the Reichsmark. That was Hitler's currency. So money was worthless. But anyone who had the old silver coins, which was
Hmm.
Maria Theresian thaler, they could go to a store and they could get anything the store had. They would take you to the back room and give you, real butter, because we had margarine, and the margarine was made out of petroleum, and it tasted like petroleum. That's what the average person had. But if you had these silver coins, they would actually sell you real butter, or you had to go to the black market and, find a guy with a big trench coat, and that was a black market operator. In the black markets, you could get anything. I remember going there with my parents, and they would be buying on the black market things that you couldn't get in the stores.
I remember we did that special where you spoke about your childhood, Bert, and how gold and silver really did save your family. And the people wanted to know what city exactly were you in Germany?
Well, I was born in Cologne, which is
Uh-huh.
yeah, right in the middle. It has a beautiful 800-year-old cathedral, and it was not that
Yes.
much damaged in the war. Yeah, so yeah,
Yeah.
beautiful area. It's on the Rhine River, so it's a beautiful city. But
Yeah.
during the war, we
Not to
had
digress.
yeah.
Not to digress, but people were curious because your story touched so many people's lives. Before we move on from gold and silver and really look at the market as a whole, which you say there's a lot of systemic risk here, and that's important to talk about. I know you also brought up the fact Tucker Carlson has gotten into gold and silver. Everyone's jumping on this bandwagon, Bert. What are your thoughts on that? And can he be a
Yeah.
disruptor in the space?
Well, usually when celebrities get into gold and silver, it's time to start being careful, you know. So, I mean, buying at these prices has a much higher degree of risk than buying, let's say, 3 months ago or 6 months ago.
Or maybe people are just waking up to the fact that gold and silver are the only solution here. Bert, let's talk about, like I said, we're heading into almost a new year. I can't believe another year has gone. What do you expect from the stock market as we just started December, but we're going to end the year? What do you see in store?
Well, our focus had been that we would have a good year-end rally, because institutional money managers, they have to show the year-end portfolios, and what they usually do is what's called window dressing, and so they kick out all the stocks that haven't done well, that have really plunged. They don't want to show them in their portfolios, so they sell those, and they buy the stocks that have done well, and that are more or less conservative. They don't want to buy stuff that's suddenly at like, what is a Palantir, I think, has a PE ratio of over 300. But people buy these stocks. And I was wondering, don't they know what a PE ratio of 300 is? I mean, if you want the whole company, you would buy it at that PE ratio. Would take it 300 years of earnings just to get your money back. You still don't have any profit.
Right.
Yeah, I don't know many people that have lived 300 years. Have you?
I'd love to. I know personally, in health, in good health,
Yeah,
and of
there's
course
a
my family.
qualifier. That's a big qualifier.
Uh, uh, okay, talk to me, Bert, about the risks you see on the horizon, because this is what people love to know from you.
I see huge risk. And
Oh
I
boy.
think one thing that people are really missing is why the markets have gone up. And to me, this is we're seeing really a rush away from currencies, and this is not just the U.S. Everybody talks about the dollar; they want to make the dollar cheaper and so on. But the dollar value is based on a basket of other currencies, so you're measuring the value of the dollar in terms of other currencies, not in terms of real money. The only real money is gold. You know, and this is so important to realize. You know, so right now, what I see is the stock market rising. Of course, it's due to the Federal Reserve. They have been not been practicing tight money. They always say that, but that's a blatant lie. They say, oh yeah, we still have quantitative tightening, and we're going to relax in December and remove that quantitative tightening. That's a bunch of baloney. Money supply M2 is now at a new record high. Bank loans are at a new record high. That does not happen when you have tight money. The bank loans shrink when you have tight money. Money supply does not rise to new highs when you have tight money. So we have loose money. And the loose money is fueling the markets. And the U.S. is not the only one. All the other countries are doing the same thing. So I think what we're seeing is worldwide is a rush away from currencies because they're really making our currencies cheaper. And if you don't believe that that has an effect, I was used as a good common denominator for the value of money, the purchasing power, a Dairy Queen cone, because when I was young in high school, we'd buy a Dairy Queen cone for 5 cents. And if you wanted it dipped in chocolate, it would be 10 cents. Now that same cone, I think is about $3.50, something like that. So the same cone, but suddenly the numbers get much larger. So our measuring stick is shrinking. And that's the way to think about it. Our measuring stick of value for money is shrinking. So our yardstick is getting smaller. But suddenly the yardstick is only half a yard long. So you need more yardsticks, right, to measure the same thing.
And on that note, you just made me think of something. I covered last week in depth what's going on in Japan and how many are now predicting a global financial meltdown following Japan's carry trade closure, and how this will, it's basically the canary in the coal mine and will just cause a global domino effect. Do you see that unfolding? How big and bad is the Japan angle here, Bert?
Yeah, I think Japan is overdue for another crisis because what they have done, this was even a couple of years ago. It was said that the government owns over 70% of all the stocks in the market via ETFs. The government doesn't buy the individual stocks, they buy the ETFs. And via the ETFs, they owned over 70% of all the stocks in Japan. It's a totally artificial market. They had the interest rates down to zero, etc. And it always still went back to the 1980 implosion. I remember 1980, the Bank of Japan said, well, we're going to stop the speculation. Our goal is to get the real estate prices down by 30%. And we were at that time, this means you're going to have a crash in Japan. Real estate prices will go down more than 30%. If they aim for 30, they'll probably go down 60%, which happened. And so that was the end of the party. And people thought, oh no, Japan's, they're buying up all these huge buildings in the United States, Rockefeller Center, etc. Complexes like that, because their money was so cheap. For 1% interest, you can outbid anybody else that wants to buy it.
Of
And
course.
so that's what happened. And they're still living with the consequences.
And I don't know if you saw Elon Musk's recent tweet on X, where, talking about threats, he said, war is inevitable. 5 years, 10 at most. I thought that was a pretty chilling tweet.
Yeah. Yeah, I think he's a very smart guy. I like him. He's one of the world class geniuses that we have, And so what I see out there, we have a total lack of intelligent leadership worldwide. Worldwide. Take a look at Europe, the nations. I mean, I always look at, would I hire that person? That's always what I see these people say.
Right.
Would I hire a person that I don't think I would hire that person to carry out the garbage. With any one of them,
Wow.
they are just a bunch of nutcakes. I mean, look at. I don't want to name anybody, but it's just absolutely incredible the lack of leadership we have. Look at Trump wanted to, you can have peace in Ukraine in 24 hours. How many 24-hour periods have passed? I think it's almost a year now. We still don't have peace in the Ukraine. We have even more problems in the Middle East with Gaza. That's not a war. It's just basic extermination of about 8 million people. So, we have these type of things. Now comes Nigeria, then comes Venezuela. We're going to attack Venezuela. For what? Is it for their oil or is it for their emeralds and golds? What is the reason for having a war? It certainly isn't drugs, because if we want to fight drugs, we just go and invade Mexico and clean up the cartel. That's our neighbor. They have a border with the United States. Venezuela is 1,000 miles away. So, I mean, we're having a war mentality worldwide. Everybody loves wars because you can make so much money under the table. Look at Zelensky. He's supposedly worth $1 billionaire now. He used to be a comedian at nightclub shows. I mean, I won't even tell you about the obscene acts that he had during his nightclub shows. It's horrible. He's a horrible person. His term was up a year ago in Ukraine. He's an illegal leader of a country. So how can Russia ever sign any kind of an agreement with a guy who's not a legal leader of the country? Because the country can at any time say, hey, he was not he was a dictator. He just stayed. He wouldn't leave his office. And so therefore this piece of paper is worth nothing. People never talk about that. There's no way that Zelensky can sign any piece of paper that has any value.
Just wrapping here, Bert, I want to get back to that point about the correction we're seeing in Bitcoin. What do you make of this decoupling of Bitcoin with stocks? Because we've always talked about how they moves in tandem. It's a risk asset. You know the storyline.
Yes.
Why the decoupling here?
I think people finally realize that the cryptos are dangerous, and with the Stablecoin Act now, I think it makes it clear. I mean, I wouldn't touch that stuff with a 10-foot pole. Right now, everything is false. Everything that we hear is false, especially on you turn on TV. That's why podcasts like yours are so important, because you really have people who don't have an axe to grind. We don't sell precious metals. We're not brokers, etc. The only thing we sell is our research. Yeah. So, and I've always avoided conflicts of interest. I know it's when gold and silver are rising sharply, everybody wants to get into that business, like Tucker Carlson. We always avoid it, because I always say the bull market's always then. So what am I going to do if I have 20 people sitting there at desk selling gold and silver? Am I going to say, oh, we're going to disregard our sell signals? In 1980, right at the top, the price was $694 on gold on the way down. We said, that's it. We're going into a 20-year bear market on gold. And people wouldn't believe it, because they were looking for $3,000, and gold was $800 at the high in 1980. We said, no, it's a 20-year bear market. And lo and behold, that our cycle study was so accurate, and it really even surprised us, because cycles, they vary a little bit from left to right. And but the bottom was exactly the year 2000, 20 years later.
And here we are in a roaring bull market for gold and silver.
And the other part of the forecast in 1980 was that will be followed by a 31-year bull market. And we said, we have no idea what would cause a 31-year bull market
Yep.
in gold. Well, now we know. Infinite money printing.
Now we know. Bert, just a final point, because like I said, you warning about the systemic risk. You spoke about bank loans at record highs. I know this is something of great concern to you. So what's the best defense that people have?
Well, I think education is so important. You have to know. Don't just wait for buy and sell signals. That's you have to know why. You have to know the reason why. Why is the market going up? People say earnings and all this stuff. No, the market is going up because there is a rush away from money. People want to get out of money and get into something that has more value. And your stocks actually have more value when they're reasonably priced, and that's why so much money went into stocks, because companies can raise prices when inflation goes up, but there comes the limit. When stocks that are usually selling at a PE of, let's say, 18, suddenly they're selling at a price earnings ratio of 40 or 50, then that is not a good buy anymore. It gets too expensive. And so therefore you want to avoid it. So right now, I was told save money, treasury bills, short-term treasury bills. I found people don't know the difference between the T-bill and the T-bond. Well, T-bill is short-term, 30 to 90, most are 90 days. So you don't lose money because the price goes down, okay? The price basically stays the same. Every 90 days, it's the same price. So you don't lose that way. You have the full faith and credit of the United States. The United States is never going to default on its treasury bills. So you don't want to go into money market funds that have other crap in it, because they stuff all the commercial paper, all the things that Wall Street doesn't want to stuff into these money market funds, and you don't want to either.
And we started with silver. Let's end on silver. By the way, I had Mark Faber on. I was on a roundtable with him, and he loves platinum. So bullish platinum. I don't know if you had any thoughts on platinum, Bert, but would you buy silver here? Would you buy silver here?
It depends what your time horizon is. Is it 1 day, 1 week, 1 month? What's your time horizon?
Like you say, like in your terms, no selling date.
Yeah.
Long term.
If your goal is to preserve wealth,
yes,
I would use dollar cost averaging. Dollar cost.
Okay.
We use that term all the time. 40, 50 years ago, I haven't heard anybody talk about dollar cost averaging.
Well, people probably are like, Bert, how do I do that? They don't even, but explain, how do you even calculate that?
You go online and you find out yourself what it is and how to do it. That's the way to educate yourself. Don't listen to some guy who comes onto a podcast. Just, we give people clues. Educate yourself, find out what dollar cost averaging is. So you're averaging out your price. As it goes down, you buy more. Most people only want to buy more if it goes up. It's the other way around. You want to buy more as it goes down. So that's it. Don't be leveraged. That's another key. People always disregard that. I've talked to people because I do consultations for a fee, and people that really don't have much of an idea, they buy these triple leveraged ETFs. And I said, do you know that? Because they say, well, if the market's going to go up, I'm going to buy, let's say, an S&P triple leveraged, okay? So my ETF is going to go up 3 times more than the S&P.
Right.
Oh, there's one example. For example, I gave it in the Wellington letter, and that is that there was an ETF in the AI sector, and went up about 23% this year, and the ETF was down 67%. Although it was a bullish ETF. So actually, people would have lost 67%, although the market went with them and did everything they thought. That's what happens. It is, again, math. People don't want to spend the time to know how the math works and leverage ETFs.
So wait, you like platinum?
I like platinum. Yes, in fact, I had it and as a trade, and yeah, I still have some platinum. Platinum is way underpriced, and I agree with Faber about
Yeah, he's trying to create a platinum squeeze. So he told me,
that. Yeah,
go
it
out
would be
there,
easy. Would be
spread
easy.
the word.
Yeah, see, that's one reason why I'm careful about platinum, because it's a very thin market. It can easily be manipulated. I'm always
Yeah,
leery nowadays. Everything is manipulated in the market, so you want to be smart. Manipulators focus on the short term, and I used to be
there
a
you go.
short-term trader. Now I have become a long-term trader, and Jesse Livermore, who was the greatest trader of all time in the 1920s. He said in 1935, he said, the big money is made by sitting, you know, the buy it. And he was a very short-term trader. He was the best there was. Yeah.
Wow.
Yeah. So,
Wise words. Bert Dohmen, I love speaking with you. Come back soon, okay?
yeah. Okay, we'll do. Okay, if I don't talk to you first, have a wonderful holiday season and Merry Christmas. I think we're allowed to
And
say
to you
Merry
as
Christmas
well.
again, right?
We are. I never stopped saying it, actually.
Yeah.
I scream it from the rooftops, so
Similarly.
I never stopped.
Exactly. That's the way to be. No, it's always a pleasure, and I wish you all of your wonderful viewers, and you have a lot of them. All the best too, and always remember, greed does not get rewarded. Don't get leveraged. You know, and don't be enticed by all these tokens and
Greed.
NPFs and I mean, there's so much crap that's being sold. And in fact, I said it recently, I said, there will be books written in about 30 or 40 years about this. And I said, how could people be ever enticed to buy this stuff that on its face, it really had zero value, you know? And they're putting billions and billions into this, And even our president's family is involved in this. So, but that's human nature, right? Just go back. Isaac Newton, the greatest physicist of his time, he lost a fortune in a tulip bubble, where one tulip bulb was worth like the equivalent of $10,000. And then he said, I can forecast the movements of heavenly bodies, but I cannot forecast the emotions of human beings.
You never know what humans are capable
Yeah,
of.
yeah. Okay.
Thank you so much, Bert.
Okay, then, yeah. All the best to you. Thank you.
And thank you all for watching. As always, reach out to my colleagues at ITM Trading. There's a link below in the description. Tell them Daniela sent you, and they'll take extra great care of you if you're thinking of starting your journey in gold, silver, or platinum. That's it for me. We'll see you soon.